Okay, welcome back. So, carrying on with this 2007 ordinary level paper, we're going to now move on to part B, which says prepare the cash flow statement of Thornton Limited for the year ended 31st of the 12th, 2006 under the following headings. So we must use these headings when we're preparing this cash flow statement. And it is true that in real life, there are certain headings that you are required to use in certain financial accounting documents, and also in our exams we were required to use these headings. Okay, so first things first is I've just started, this is part B here, I've just started it by writing out the title here, which again you can get from the question. It says cash flow statement of Thornton Limited for the year ended 31st of the 12th, 2006. I've just identically written it down here, and then it says under the following headings, so I've just put in the headings that they asked you to include: operating activities, etc, etc, etc. I've left a little gap there because I know how much space I need, but when you're doing it you can just write them down as you go along. Okay, so the first thing is I mentioned already that this whole question really is used to determine how much your cash or your money has gone up by from one year to the next. Now we have part of that puzzle done when we did part A. We said that your cash, your net cash inflow, or your cash went up by 200,000 just from your operating activities alone. But we also mentioned in the last part, or last video, that your cash can go up or down for other reasons that are not included in a trading profit and loss account, and that have not been included when you were calculating operating profit. And I think the example I mentioned last time was if you bought a fixed asset like a van or something like that for 70,000, that doesn't get included anywhere in your trading profit and loss account, so it won't be included in this figure for how much your money has gone up or down by. And so in this cash flow statement part here, we're going to include all of the other times, I suppose, when your cash has gone up or down, and eventually at the very end we're going to work out what is your increase or decrease in cash for the year from all of your different activities. Okay, so the first one is, the first heading is operating activities, and the first item we put in is the amount by which your money has gone up or down from operating activities. And we know from the last thing your money went up by 200,000, so it's just going to be 200,000, and what you write in is net cash inflow, the exact same thing as the last line of the reconciliation statement. Net cash inflow from operating activities. Okay, now the next part of it is return on investments and servicing of finance. Now what you put in under this heading is any money that you earned from your investments. So usually that comes in these questions in the form of investment interest, which doesn't tend to come up at ordinary level, but it does at higher level. So any interest you earned from an investment that you made, if you took 100,000 and lodged it in a bank account and you earned some interest, that interest would go in here. Not the actual investment themselves. There's a different section for whether you spent money buying investments or made money from selling investments. This is just the money that you earned from investments goes in here. Also over here, servicing of finance. Well, when we talk about financing a business, it's normally through selling shares or getting loans. And so this servicing of finance, you could take it to mean servicing of loans. In other words, paying interest on loans. So under this heading, it's any interest in from investments, which would be a plus because it would increase our money, or interest going out, that interest that we pay on any loans that we have. Okay, so in the ordinary level, as I said, there's usually just the interest paid. And the amount of interest that we paid during the year is, well, if we look at our trading profit and loss account, it says interest paid 9,000. Now this is a good time, I think, to mention that in a trading profit and loss account, there's ordinarily, what goes in there is what you ought to be paying, what you should be paying. In other words, what your bill is, not necessarily what you did pay. So for instance, what I mean is, if you had in your expenses section of a trading profit and loss account, if you had an expense which was electricity that you paid, okay? If you had an electricity bill during the year 2006 for 150 euros, and you just paid 75 euros of that bill. You said, well, look, I'll pay the rest of it later. So you paid 75, but the bill was 150 for March's electricity, we'll say, or something. Well, then the amount you put in a trading profit and loss is the amount of the bill, the amount that you owe, the 150,000, not the amount that you paid. Even if you still owe 75 and you only paid 75, you don't put any of that in here. It's just the amount that you owe. So when it says interest paid here, really it's the interest that you ought to be paying is 9,000. Okay. Sometimes the interest that you ought to be paying is the same as the interest that you did pay. So for instance, if you had that bill, that electricity bill for 150 and you paid the full 150, then the amount that you ought to be paying and the amount that you paid are the same, but not all the time. Now in this case, and I'll explain it a little bit more later, since there's no down here, there's no bit that says interest due, so interest still to be paid in your balance sheet, that means you must have paid the full 9,000. So we can put the full 9,000 in over here as money that you paid during the year, and we put it in as a minus because if you paid it, it was money that went out of your bank account. Okay. Next one is taxation, and under taxation we put in tax paid or corporation tax paid. You'll get away with just tax paid as well. Okay, and again we look, the profit and loss account says that we should be paying 44,000 for this year, but here's the thing. Down here we do, under our current liabilities, if you like, we have amounts owing to be yet to be paid for tax. So in 2005 we had a tax bill at the very end of the year. We owed 38,000. At the end of 2006 we owed 44,000. So here's the thing, in order to explain this. If you had a bill that's outstanding that you hadn't paid at the end of 2005 of 38,000, if you, during 2006, you got a further bill for 44,000, okay, that means that you would owe 38,000 plus 44,000, that's what, 82,000, isn't it? That's what you should owe then after getting this bill. But according to your balance sheet at the end of 2006, it says you only owe 44, which means you must have paid some of that 82,000. And in fact, the amount you paid, if I subtract the 44 that you still owe from the 82, you're left with 38. It means you must have paid 38,000. So I'm just going to put in that 38,000 here, again as a minus. And just to say, I suppose one more time, like for the ordinary level, your taxes generally just paid the following year after it has become due. So your tax for 2005, at the end of 2005, you haven't paid it yet. Okay, that's the amount of tax that you paid during 2006, and then 2006's tax bill, that 44,000, you're going to pay that during 2007. So you're usually paying it a year in arrears.